Hey everybody, today is Friday the 22nd of August 2014 and this is Shannon from alphatrends.net. Hope you had a good week. The market certainly did. The S&P 500 and the NASDAQ, Russell 2000 all came in with just under 2% gain, while the semiconductors, financials, and the Dow did even better than that. The big loser this week was oil and gold. So let's take a look at these trends here. And once again, you know, the people who fight the trends and look to call a top every time we have a pullback are the ones who are suffering right now. The S&P 500 a week and a half, 2 weeks ago, got back above that 5-day moving average, and at this point right in here, this is where I was telling people that this is where the market trend is still innocent until proven guilty on the intermediate term time frame. We stepped aside for a decline, and that we want to remain bullish as long as the 5-day moving average is higher and we have a pattern of higher highs and higher lows above that 5-day moving average. So there's no doubt that the market has gotten a little bit stretched here with nearly a 10-point rally here, about 5%, and we're closing in on an even number of 200, but there's zero evidence that the market is topping out. And again, you know, what the strategy that I like to use is that when we see pullbacks, we get cautious, we move to the sidelines, we take shorts in individual stocks and manage risk on an individual stock basis. And when the market's hitting on all cylinders like it did this week, then that's when you want to be long the good stocks, obviously, and manage risk on, again, the individual stock basis. So we are at all-time highs basically here in the S&P 500 for a weekly close at least. We were down 31 cents today, but again, we're in a primary uptrend and innocent till proven guilty. I think that next week we want to see really about 198 hold. I think that's our first more important level that we want to see hold up as potential support. That would pull us back into this area a little bit, and that would certainly still be healthy in a very, even at this point, a very shallow retracement. As I said on Yahoo Finance 2 weeks ago, a week and a half ago, this market is innocent till proven guilty, and to try to pick a top is just really foolish. You have to be aware of all the headlines and step aside when things get uncertain, but then be willing to get back involved, set your stops, and know that there's always risk in the market. It's not a risk on, risk off thing. There's always risk in the market, and we control that risk by knowing when to be involved more aggressively than other times, and when to be long versus short, and position sizing, and which stocks to be involved in. The NASDAQ also closing, well, it closed at a new high today as well, but on the weekly time frame, still clearly very much in an uptrend here, and closing in on that $100 level. And even these 1999 2000 highs back here are really looking like they're kind of in reach now. It's been a fantastic bull market, and people who continue to try to pick the tops are the ones who are losing out here, or worse, getting you know, squeezed on their shorts. The NASDAQ broke this short-term level of resistance, and we spoke over and over again about potential levels of resistance. So when the market broke that 96 level, we spoke about the potential for resistance at the prior highs. There's simply zero evidence, though, that the market was making any highs there. We still have this entire, you know, last couple weeks since we broke that 96-ish level, higher highs and higher lows. So the buyers remain in control. Burden of proof is on the sellers. Next week, what we'll want to see is our first more important level of support. I think would be about 98.5, and if that fails to hold, then, you know, perhaps we see a little bit of sideways consolidation, and then maybe even down towards 97 to 97.5. This prior band of resistance in here, if we were to pull back down there, that would be a decent little pullback, but still not doing any trend to the damage rather to the trend at all. The Russell 2000 is battling this 50-day moving average. So we had a nice rally off that 110 level, but it's kind of stalled out in here and has really lagged, you know, recently in the last in the last year. This, you know, Russell 2000 is still down. Now this past week, in this month, it's kind of holding its own, but the good news is that we got back above that volume weighted average price year to date. 108. This is the average price when adjusted for volume, and that's 114. So we're going to want to see 114 hold next week. But realistically, when you look at this daily chart, there's just not a whole lot of interesting here. And the weekly chart, it's unclear. Is this distribution before a bigger drop? Well, we don't want to predict that, but if we were to get below and hold below 108 in the next couple months, then it could be more damaging to this market. Perhaps we'd go test this trend line. But again, that's not relevant right now. Don't try to think too far in the future. The opportunities that are there in front of us each day for trades, and that's what we should be focusing on. Semiconductors at a new high as well. They closed with a gain once again today. So, this group got back above that 49 and a quarter area where we had resistance, and we were looking for the potential of further resistance in this area. No such resistance found. That's why we look at it and say potential resistance. We don't want to sell short at a potential level of resistance. We only know after the fact. So we've got this really, nice steep uptrend here. I think if we broke 51, we'd probably get a test of the 55-day moving average down at about 50.75, and perhaps drop down towards 50.5. The markets are clearly overbought, and you can talk about volume till you're blue in the face, but the volume is really irrelevant to making money in the market unless you're trying to trade 1 million shares at a time, which I don't think is the case for most people. Financials had a potential area of resistance in here at 23 to 23.05, and they blasted right through it on Thursday, continuing this rally that began as the market got back above that 5-day moving average and made a higher high above a rising 5-day moving average. So again, innocent till proven guilty. We got a pullback here last week that tested that 5-day moving average. It recovered quickly, and here we are again at new highs on a weekly basis that haven't been seen in a good long time here, despite big negative news headlines about record fines and that sort of thing. The fact is, only price pays. The news is going to confuse you most of the time. You talk about all the macro factors that really this market just continues to ignore. So focus on price action. Apple continues to move higher. We got bullish on that as it broke above the 5-day moving average as well. And it didn't get in at the bottom, but you don't need to suffer through these declines. If you can get in as the momentum turns higher and raise your stops, I think at this point for what I'm looking at, I think the more important level, if you've been holding it, is probably about just under 101. It's getting a little bit stretched out. A pullback below that 101 would make sense, and then to digest some of these gains and maybe even pull back down towards about 98. But the trend is still higher. Trying to pick a top is an exercise in futility, and the proper way to manage risk is to look at it and use the definition of trend. If it continues to make higher lows, you raise your stop underneath that, and if you're uncomfortable, move to the sideline. Let's talk about some other stocks here. When I was on Yahoo Finance a couple weeks ago, week and a half ago, I spoke about the biotech stocks and the fact that they are still in a nice uptrend, and we've got this cup and handle formation. We had a 20% pullback, greater than 20% pullback in March and April, and back here we're starting to see those signs that the buyers were regaining control, and they did regain control here. We had the test of the 50-day moving average, and this is a bullish market. You can say that it's up too much or whatever argument you want to make, but you're arguing with price action. For now, I think in the very near term, as long as we remain above 260-250, then the buyers are still in control of the intermediate term time frame, and we're just getting a little bit of a pause through time right now, and there's nothing wrong with that. With markets correcting, they don't go straight up. I spoke about Twitter as well, and Twitter, the interesting thing here about Twitter was, well, actually there's a couple of things here. One, the volume weighted average price since the stock came public. I've been referencing that for a while. That's at 45.51. Today it broke above that level. So since the stock came public, the average price that it traded based on volume is 45.51. We broke above that today, and that break came after this market had held on to the volume weighted average price since the event. The event event was, of course, the earnings report. So that line I just drew straight across is a volume weighted average price line. I can draw it down here, and you can see it's drawing the line straight up. I have no control over where that goes. It's a volume weighted average price line, and you can see here how that, the stock got back above the 5-day moving average and held that volume weighted average price since the event. Today it broke beyond the volume weighted average price year to date, and I think that Twitter looks like it's headed, the worst case stop for new entries that you might have made today would be right here at about 44.75. But it looks to me like Twitter ought to be heading up, maybe to test at least the highs since the company reported earnings. So it's in good shape. I also spoke about a couple other stocks, which were ZLTQ. This is a laser company that has a fat burning laser, and I spoke about it being bullish in here with a stop down underneath about $19 a share. So that's still a good place for a stop in this stock. It didn't do really much of anything today, this week, but I think a stop down probably at about $19.15. The stock is still set up very nicely for further continuation of the upside, and there's a pretty big size short position in this stock. It appears to me the shorts are wrong. If you own it, since I've spoken about it, maybe you own it about 19. Let's just, I'll say $20 a share, just to give it the the worst case entry. I think would be about $20 a share, and at this point with a stop down at about 19 and a quarter, you know what your risk is, and the headlines and what the market does really shouldn't be relevant to what you're doing in ZLTQ. That's, you try manage each stock on its own merits. Crocs was another one I mentioned, and I said in Crocs that it's not ready to buy yet, that the stock had this longer term base, and what we were looking for is, they reported earnings over here, it gapped up, but it's been slowly bleeding off. It's not time to buy it. It's still got a declining 5-day moving average. I was going to get it involved if it got above this level this past week, because that would have made a higher high above a flat to advancing 5-day moving average, but it's still making this pattern of lower highs and lower lows. So I think next week maybe you set an alert about 15.75, but I'm really not excited about Crocs. It's just another idea, and if it can show a little bit of momentum, maybe above 15.75 next week, then I think it would be okay for a swing trade with a stop underneath this pullback low, so at about $15.35. So only about 40 cents worth of risk, and I think the potential upside is at least a test of maybe these recent highs, and if it can continue from there, then it ought to just continue to make this pattern of higher highs and higher lows. So there's still a lot of good opportunity in this market. Gold, let's talk about that one for a minute, because I always get questions about it, and anytime it spikes up once or twice, people get all excited about gold. But as I've been saying, it retraced 2/3 of the low from 2008 to the high of 2011, and now it's in a basing period. It's not in an uptrend, it's not in a downtrend, it's more neutral right now, and if they don't scare you out on the way down, they'll typically wear you out. So I view gold as a waste of time personally. Bond market continued, it was up a little bit, I guess, this week, right? Let's take a look back at that. It was down slightly, but still clearly in an uptrend. We broke some resistance a week and a half ago at this 115.5 to 116 level. That held as support. So bonds remain in an uptrend. That's obviously bullish for interest rates, which continue to decline. And that'll do it for me today. Hope everybody had a good week. We had some fantastic winners in Alpha Trends. I'm sure you did as well, so I'm not going to bore you with those. But the point is not whether we had winners or not, but there was a specific strategy and risk management that are the guidelines behind every trade that we talk about there. So if you haven't, feel free to go ahead and take a free trial, and talk to you next week. Thanks.